Hello and welcome to Economy and Markets TV, where we have conversations with a purpose. I'm your host, Dave Okensquist, Senior Research Analyst here at Dent. Joining me, of course, is the founder and editor of Boom and Bust, Mr. Harry Dent. Harry, how are you?
Oh, nice to be back, Dave.
Yeah, good talking to you. Last time we just saw each other just a little while ago at the Irrational Economic Summit. It was absolutely a great event. I know you're still thinking about it and maybe even thinking about writing some topics based on some of the conversations that went on at IES, didn't you?
Yeah. We got to explain to people the difference between how money goes into the money supply and how money goes into financial assets. Those are two things, two ways of creating money. And there
Yeah.
was a big discussion of that had, I think, some people confused. So, yeah, I'm definitely going to be writing about that.
It's very much in the weeds, in terms of details and technicals, but it is important and something certainly worth addressing. Now, Harry, today I want to ask you about what's going on in the markets. But before we get into that, I know before we got on, you talked a little bit about Hong Kong. That's kind of been on your mind. What are you seeing in the protest developments and as it relates to China?
I mean, I tell you, I am very, very impressed. I've been I've been bashing China for years and years and years. They're the fastest growing country in the world. It looks like an economic miracle, but they're doing all the wrong tactics. So
Yeah.
good long-term strategy to take over the world, to urbanize, all that sort of to build a belt and road and all this stuff. But they are overbuilding everything, top-down control and management in a bottoms-up world. I mean, the world's been decentralizing since the automobile and electricity and phones. And now the computer and internet revolution just makes it totally bottoms up. So I've been knowing for years, look, China needs a revolution.
Mm-hmm.
They're doing the wrong thing for their people. They're using tactics that have already failed for countries like Russia, this top-down communist model. Now they're adding, what they call state-controlled capitalism. That is not a good combination. That's the worst of both worlds. Democracy balances the extremes of capitalism. State-driven and communist governments only exacerbate them by overbuilding and doing all the stuff that they're doing.
Let me ask you a question then. So they're trying to do sort of the same thing as the Soviets, but maybe with capitalism, at least if you give the people some trinkets, they'll maybe be happy with the system. Is that sort of what you see?
The problem is you have no balance. There's nobody to balance out the system. Capitalism, left to its own, will be the 800-pound gorilla having all the women and getting all the best food and everybody else fighting for scraps. It's a 0.1 and 1% takeover in capitalism. So democracy is a counter to that, and democracy can question if what governments are doing and throw out people if they don't like them. They don't have that in China. She's in for life, although the Communist Party could throw them out, but the people can't throw them out. So again, my problem with China, I see this. They're going to have to change. This is not going to work, and that would be a shame for their people. So I'm like, the problem is, China doesn't have young people because of their top-down one-child policy since the early 70s. So and the few young people they had in Tiananmen Square in the late 80s came out and got squashed by tanks. So they got taught very early on, don't even think about rebelling against this government. Yep. So Hong Kong, which is more sophisticated, a lot more immigrants from, fluent people from China and overseas, they are revolting and they're not giving up. It reminds me of the Puerto Ricans recently when the government and the kind of insiders here had these kind of like insults to the people that got caught, on chat. And the people just would not stop. They go, no, I won't. I'll do this, but I won't sit down. They did not stop until the government sat down. I could tell that from day two that was going to happen. Mm-hmm. They're not stopping. And they realize since it's an urban environment with all these tall buildings, they can get up in these buildings. It's like being in a castle. It's, all over the invaders, hot oil. I mean, so this is good. China needs this. This government has to be questioned. It has to be stopped. And when this downturn happening that I'm predicting, China is going to get hit the hardest because they have overexpanded the most. What Japan did was similar, but not even compared to China. And what Southeast Asia and Korea did that peaked in 1997 and they had a big setback. It's these Asian countries, top-down overbuilding. That's okay in the early stages of urbanization and becoming a more developed country, but it's not okay at this point for China. China's 60% urban now. This is ridiculous to still be running from a top-down government. So this is needed, and when I see the resolve of these people, they're not giving up. If Hong Kong can make the Communist Party stand down in China, other provinces and cities are going to see that too. So this is a very encouraging thing. A lot of people say, oh my gosh, they're killing tourism. It's bad for Hong Kong. It is. They are killing. This is a fight worth having, like we did in the late 1700s. So I'm very impressed. I did not expect this to happen, because revolutions are almost always started when there's a lot of young people. Young people are more likely to at least follow a revolution and to make it happen. And this is happening despite a huge dearth of young people. So I like this development. And again, I think these people are going to be proven even more right when the economy globally falls apart and China takes the biggest hit. I think economists and most people saying, oh, China's got so much growth, they got so much top-down control, they'll have the least hit. No, they have set them, they have so overbuilt that when that net worth, 75% of Chinese net worth starts collapsing and they start panicking and selling their empty speculative condos, there's going to be no stopping this thing. It's going to be a meltdown. So I like this.
Excellent. Yeah, that's right. As you mentioned, the Chinese are heavily invested in real estate, and when that goes down, they will all take a massive hit.
The most heavily in the world, and they're not just invested in real estate; they're invested in empty real estate.
Yeah,
that's insanity.
Absolutely. All right, so I promised to ask you about the markets, Harry. What have you seen over the last week or so? What's been going on, and what's sort of your very near-term outlook?
I'm like getting really annoyed. Okay, it's the same old thing. The market's just going side. This has been happening since the January bubble. Like that was a bubble-like peak. That really looked like a top.
Yeah.
Every form, every way. But because of all this stimulus by governments, it's just gone sideways ever since. But I think the clue here, each correction goes down deeper. Now, so I still think there's a high chance that's going to happen, that we get a correction deeper than September to December of 2018, which were down 24%. So I think the next win will be maybe 27% plus for the Dow and maybe 30% plus for the NASDAQ. Now, again, though, we are still right near the tops. The market keeps trying to break up, but we got headwinds everywhere. You got Trump impeachment getting serious. The market's got to grapple with that at some point. This bubble does not last if the Democrats come in or the Republicans have a weaker candidate than Trump. It's just not going to be able to. Trump has kept this bubble going for the markets. This China deal they just had, all it was, I mean, it's a slight little, oh, we're not going to raise tariffs further. It's not the makings of a real deal. For these markets to break up and to get this blow off top, Dow 33,000 plus, NASDAQ 10,000, which I've been looking for. We need all these things to come together, and the Fed has to get more aggressive. Well, the Fed is starting to get more aggressive, but these other things are working against it. So if we can't break up decisively in say the next so many weeks, it's got to be more than a new high, because we've got these slightly higher highs in this megaphone pattern I've been talking about month after month. If we can break through that, then yeah, but the odds still tell me we're having a hard time breaking up, which means at some point the market gives up, the smart money starts shorting it, and it goes down. So we could get a nasty correction and then a final run that could be 50, 60% in the NASDAQ, and the NASDAQ could make slight new highs or even more than that. But I don't expect the S&P and Dow to in that scenario. So stocks, for most stocks, may be about as high as they're going to get here unless we can have this breakout. If not, look for a 25, 30% correction, which could happen just literally in the next couple of months. Yeah, so we've been going sideways so long, the market has to either break up strongly or down strongly. It can't just keep doing this much longer. So I'm still favoring the downside. We're going to be talking about this in the November boom and bust, which is about to come out.
Yeah, absolutely. Yeah, look for that, or subscribe to Boom and Bust to get Harry's in-depth analysis. Harry, thank you so much for providing that market update and your thoughts on the Hong Kong situation as it relates to China. Very important stuff there. If you've got a comment or a question, send those to tv@economyandmarkets.com, and we will read them to Harry and get his expertise and his insight on whatever you ask, but maybe not so much on gold, Harry, or do you want we talked before. He's not a gold bug. He doesn't like gold.
Yeah, but the gold's in a strong bear market rally. And I, once it broke 1525, I'm like, no, this thing could go to 17, 1800. I still think gold's going to more go up than down in the coming months. In fact, if we do get this stock correction, if stocks go down to new lows in the next couple months, very likely gold's going to go up to 17, 1800. And then I would be looking at selling. I do not see a new bull market for gold, but this is a bear market rally that's going to could get pretty close to the old highs. And that happens a lot.
Yeah.
I still see it as a bear market rally. So the gold bugs say, okay, gold's finally going to break through and then go to 4,000 or 5,000. This is not going to happen.
We just like to tease the gold bugs, but we do love all the questions. So again, send us.
I always say, Dave, gold will get to 4,000 to 5,000 potentially in the next great commodity boom. That's going to be a place I'm going to be focusing in a few years, gold especially. But when the gold bugs are dead, that's my forecast.
Well,
no time soon.
Well, that's something they can pass their gold on to their kids or their grandkids, and they could benefit from it, right?
It's $700, yes.
Thanks again, Harry. For Harry Dent, I'm Dave Okensquist, and this has been Economy and Markets TV.